Well, as you just heard on that lengthy press conference involving Donald Trump, he's off to Davos after his phone discussion with President Erdogan of Turkey, where Greenland will no doubt be the topic du jour, and it'll have an effect on our market. So let's bring in the Stockspot founder and the CEO, Chris Brycki. Chris, it's good to see you. Happy New Year to you. First time I've seen you this year. So what's the fallout been overnight with all this talk about Greenland and whether or not it'll be bought or sold?
Good morning, people. Well, yes, it was a pretty rough night overseas in markets. We had the US market down just over 2%. Of course, it was closed for the MLK holiday yesterday, so we saw 2 days worth of falls, really. But I had a look at the futures market while Trump was talking, and it didn't really alleviate any concerns. Markets really closed on their lows, and I think the real concern now is bond markets. We have the Japanese bond market imploding, and now the US bond market has started to fall as well. That could be the pressure point that actually causes Trump to pause, because it did last time there was tariffs in 2025.
Just on that, because while we were looking at the same thing probably, Chris, about the Japanese 40-year yield nearing 4.3%. which, as you point out, is going to ripple through global financial markets. Can you just elaborate that simply for our audience on what that means and what sort of an effect we are likely to see?
Sure. So the government, or the government debt in Japan is traditionally really traded at a very low yield, around 0 or 1%. And even a year and a half ago, very long dated government debt in Japan was trading around 1.5% per year. That rate has now increased, as you mentioned, to over 4% for 40-year government bonds, which is really the market saying that they don't trust the ability for the Japanese government to pay the interest over the long run, and they think there's a lot of risk. And particularly as inflation is now increasing in Japan, people are concerned that debt isn't something you want to own. Now, how that impacts other global markets is that the Japanese market for debt has been one of the sources of cheap funding globally for the last 30 or so years. So if that disappears, it might actually lead to capital coming out of other countries like the US and back into Japan. And so I think all eyes at the moment are on the Japanese central bank at whether they do what's called yield curve control, which basically means selling more of their yen to control the price of debt in the long term. That would be bad for the yen, but potentially good for the share markets.
Maybe that's good for gold too, is it, Chris?
Well, I think all of this kind of points to the same situation for gold, which is that investors are just so frightened about the ability for all governments to pay off their debt. And Japan and the US are the two biggest examples.
Well, we'll see. Chris Brycki, good to see you.